Hello, everybody, and welcome. So, continuing on our exciting journey of going through SEC, Securities and Exchange Commission reporting, we're going to take a look at proxy statements or the definitive 14A. So, this is my disclaimer and copyright notice. This information and opinions in this presentation are those of the author only and not the author's employers or affiliated organizations, including but not limited to Irvine Valley College and the South Orange County Community College District. The presentation is for educational purposes only and does not constitute any legal or accounting advice whatsoever. The presentation is copyright 2008 to 2025 by Bennett Tchaikovsky. All rights are reserved. Any distribution is strictly prohibited. Note that this presentation will refer to companies and other parties or the third parties. I do not claim any copyright that belongs to those third parties. So I'm going to include a bunch of links, and I want to give a shout out to Investopedia before we get started because they do a great job of going through and summarizing the different parts here. So there are a couple of different forms of proxy statements, but let's just take a step back for a second. What exactly does a proxy statement do? Well, the proxy statement is going to basically, we're going to annually elect directors. We're also going to ratify who the auditors are. And we might be going through and doing some employee stock plans, and there may be other matters that are involved. So generally, this is what a proxy statement does. We're soliciting votes from shareholders. There's a lot within this process. I've been meaning to have a call with James Michael over at Issuer Direct to kind of like bring him in to kind of talk about the services his company offers. But you'll hear these things like, oh, like proxy solicitations, and you hire these firms if you have a contested vote. But let's just kind of go through it. So, when we look at this right over here, so the SEC requires that shareholders of a company whose securities are registered under Section 12 of the Securities and Exchange Act of 1934 receive a proxy statement prior to a shareholder meeting, right? So the information must be filed with the SEC before you solicit votes. And solicitation, whether by management or shareholders, must disclose all the important facts on the issues which they're about to kind of go through and vote for. So as you can kind of see over here, there's a lot of different basically rules. But again, this is really to help out shareholders. And when we're looking at a preliminary proxy statement, and again, I'm going to leave this up here from Investopedia, but this is basically when you use a preliminary 14As to inform the shareholders of a company of an upcoming vote. Also known as a preliminary proxy statement, it discloses all relevant details related to the issues being put forward for a vote. It is a preliminary form of the definitive proxy statement, which is going to be the one to file the final one. And again, there may be some issues that come up that would require you to use both. Say if there's a shareholder proposal coming through, again, you're going to want to talk to your securities counsel. Proxy statements are required for any issue requiring a shareholder vote, and that's going to be in the company's bylaws, such as annual meetings, election of directors, issuance of stock, changes to a company's articles of incorporation, shareholder proposals, and board compensation. Also the board composition. A preliminary proxy statement is not required for certain votes if the issue is uncontested. So I'm going to put the link up for this, and then we get it over here into the definitive proxy statement. So the definitive one is basically the final one that you're going to go through and file. It lists out the items to be up for bid or up basically for shareholder vote. And then again, you're also in this, you're going to be including a lot of discussion about the compensation of officers and directors. So the one we have over here, and this is a preliminary proxy statement over here for Meta Platforms. And as you can kind of see over here, you'll see that, okay, letter to the shareholders. Now for Meta Platforms, let's remember, if we look at the structure of Meta Platforms, and this is what's really important to remember, if I think that I can go through and vote out Mr. Zuckerberg, I'm going to be very sadly disappointed. Why is that going to be? Because Mr. Zuckerberg basically holds Class B shares. these have 10 times the voting rights of Class A shares. So there you go. Right. So you kind of say, well, why are we even doing this? It's because it's required under Delaware law, and it's also a SEC requirement. So what you're going to see here is you basically see, let's just kind of go through this. We'll just go through the statement, kind of point out some interesting things to our shareholders. I'd like to invite you to this. We'll begin the meeting over here, fellow shareholders, and then kind of just saying what happened during the year. The place basically will be a virtual meeting. And then coming down over here, we're holding a meeting for the following purposes: to elect 10 directors, ratify the appointment of Ernst & Young, the auditors, to approve an amendment to our amended and restated certificate of incorporation, to limit the liabilities as permitted by Delaware law, approve an executive plan, consider and vote upon 10 shareholder proposals if properly presented. There you go. Transact other business. So, proxy statement summary, company priorities, business highlights, our principles. And again, this is a great way to kind of say this is really a corporate, like, what's the diversity of the board of directors? What's the average age of the board of directors? Who are the nominees? Are they independent? And if we look at this over here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 9 of the 10 are in fact independent. Also notice here too that I was reading something else that they may require the board members to hold a certain number of shares. So as we kind of come over here, executive compensation highlights, and then how do you kind of go through over here and look at this? And then these are how the board is. So the board would get together and say, okay, well, we recommend that we elect the 10 directors, we ratify EY, we vote for the amendment to, limit the monetary liability of officers and directors, amend the executive incentive plan, dual class capital. Okay, so here you go. So basically, this is something where the shareholders are proposing stuff. So I'm guessing what this means, and let's go through and take a look at this. It should be kind of funny. Page 80. Wow, we have to go way back here. So let's go back here. Um, don't buy the stock if you want to change the shareholder structure. Okay. Okay. Shareholder proposals. Okay. Okay. So proposals 5 through 14 are proposals we receive from our shareholders. Okay. So text of these. Okay. Okay. So give each share an equal vote. Yeah, dude, that's not happening. What happened to Steve Jobs, man? Steve Jobs got voted out, dude. It's not going to happen. That's why you, that's why if you look at Alphabet or Google, you look at Snap, Crackle, and Pop, Snapchat. Yeah, dude, it's not happening. Um, and I also would really want you to kind of like think about as a director, it's like maintaining control of your vision is extremely important. And if the market doesn't believe you have the vision to go through, they're not going to approve a 10 times voting part in terms of the stock. Now, the other thing that we also have to think about though as well is that for as a society, the fact that if something now, Mr. Zuckerberg has recently come out and said this is as of January 2025, that he's no longer going to be doing any kind of how would you put censorship. Well, I wonder why he's saying that. But when you look at this, it's kind of that from like social media has become a pretty huge part of our society. And if those that control the social media can never be voted out, is that necessarily a good thing? And that's a much broader discussion. And that's a real, from a public standpoint, that's a really, really big question. And I don't think that that can be answered on one of these videos, but I'm just kind of bringing that to your attention to kind of say that, okay, if a company gets to be a certain size or has a certain amount of market dominance, is it healthy that those officers can never be voted out? So that's what I would kind of go through and have in terms of a response as far as like that particular shareholder proposal. The other thing too is that when you go through and you look at the risk factors of meta platforms, it is clearly disclosed that Zuckerberg's got the voting rights. And it's like, okay, here you go. Class A's continue to be volatile. Okay, so this will limit or preclude your ability to influence corporate matters. Guess what? This disclosure, this risk factor has been here the entire time. So again, it becomes more because on from a facial part, it's really clear that, you can't really vote them out. But, from a societal part, that's where that brings a bigger question, which I think you'd really be looking for Congress, and then you're starting to tell corporations what to do, and that's probably not a good idea. So in any event, that's as we kind of go through and are looking at this proxy statement. Again, I'm going to go through and include, I'll go through and share this with you. We then look at over here, and let's just kind of go, these are all the different shareholder proposals. Why you're kind of going through and saying, okay, founder and CEO since 2004. And then you have the different independent directors. All of them are independent here. So as we kind of come down and look at, let's take a look at compensation. And also you're listing out your executive officers, like who, besides Mr. Zuckerberg, is also there running Meta platforms. And so you kind of see over here, Susan Lee. She's not a CPA, but clearly she has a lot of experience. She has CPAs though that work underneath her, excuse me, chief legal officer. And then over here, you see the proposals of these. And then you've got different corporate governance items over here, board leadership, independent board oversight, who's everybody's working on here, audit and risk oversight committee. And then you're listing out, and I've kind of done these on some other videos, a privacy committee that they were required to establish. And then as we kind of go down and look at director independence, classified board evaluation. Okay. Shareholder engagement, related parties. So here you go. So this is how much EY charges for their fees. So they're charging 20 million. Actually, no, is that in thousands? They're charging 20 million for audit. They're charging 8.3 million for tax fees. Okay, so over here, this is how, again, this is basically a way of seeing pretty quickly. Okay, so here you go. So now in terms of the employees, this is kind of going through and talking about, how many shares are getting under the different plans, equity plans, cash compensation. So this is what you're getting. So as a board member, you're getting 50,000 for being a member of the board of directors, an additional retainer for being the lead independent director. You get to serve if you're on the audit and risk oversight. That's 50,000 non-chair member of the audit or risk. And then you kind of see down here, director of security. From time to time, they may provide personal security services. Okay, so here we go. Look at basically at the cash and the like. So basically stock awards, and you can kind of go through and see this basically for all other compensation. So Miss Alford was given basically the amounts reported include approximately 806,000 related to personal security, and then 950,000 for an associated gross up of taxable security services. So they're basically paying that basically. So if the security benefit is being looked as though it's you have to basically gross that up to basically pay for the, if it is taxable, you have to gross that up to pay for the taxes. For Miss Sandberg, number nine, this is basically for number 10, this is personal security for her residences during her personal travel pursuant to her overall security program. So again, this is about 3.7 million. So as we kind of go through and look at this, you're kind of going through and just kind of seeing that all of this becomes, when you're an officer or director of a publicly traded company, most all of this becomes disclosed. So I really want to encourage you to kind of go through and take a look at this different information. It really sheds a lot of light on in terms of how individuals are being compensated in terms of voting for other matters. Now, some of the other, there's this, that was like the preliminary, and then now we get into some more interesting ones. So this is basically from the Walt. This is actually a proxy statement for the Home Depot. Again, you'll see different forms of these, but they're generally going to be, coming in on the same part. So notice of annual meeting of shareholders to elect the 11 persons, ratify KPMG, attend the virtual meeting. And then over here, you've got the different table of contents. So you're going to see a lot of similarities between these proxy statements. Now, as we look over here, this is where you get a little bit more interesting things going on. So you've got the Walt Disney Company, and this is coming from the chairman of the board of the Walt Disney Company. And then you have over here from Bob Iger, and you'll notice that it's kind of the same. It's kind of the same. This part over here is like the Blackwell's group proposal. And these are different. You'll see these different nominees are saying against. So they've obviously other people put out here, but this is a form. So this is a Schedule 14A. Now, here you go. This is where it gets more fascinating. This is another version of a 14A where you're basically putting something up, where you're basically saying, okay, all of these different partners, Treon partners, they're asking for the blue proxy card. And so what this is they're really kind of saying, hey, we want to kind of go through and, basically we want you to kind of go through. They're saying, okay, election Nelson polls as directors, shareholder proposal. So they're kind of going through and kind of saying what they want to kind of go through and have vote for, which is obviously going against what the Walt Disney Company and their board of directors is kind of happening. But again, as you can kind of see this is really something where you can have, like, if you have a large group of people that are kind of coming shareholders that are not voting with management, these are the kinds of things you may see happen. And in this case, what Disney would more than likely do if it was a significant enough threat is you would have to go out and start soliciting proxies. And that is a whole separate business in of itself. So I'm going to put those up there. I encourage you to kind of go through and read them. They're kind of fun. But in any event, or at least they're fun to me. In any event, though, I want to thank you for watching. Please remember to like and subscribe. If you have any comments on the videos, please feel free to leave them in the comments. And I look forward to seeing you on future videos. Have a great day.